Well, crypto is obviously grown by leaps and bounds, and it's now playing a significant role, not really so much in transactions,
Right.
but in investment decisions of lots of Americans. And the president just issued a couple of weeks ago an executive order tasking us and other agencies with thinking about the regulation of crypto.
Did you ever think a cryptocurrency could move from a controversial legal battleground to becoming a key part of the U.S. financial system? While Bitcoin and Ethereum often dominate headlines, it's XRP, a cryptocurrency many overlooked, that's been quietly positioning itself for a seismic role in the future of finance. Recent comments from Treasury Secretary Janet Yellen have sparked whispers of a potential shift. Could XRP, a digital asset embroiled in a long-standing legal fight, be integrated into the U.S. economy?
Well, I am concerned about fiscal sustainability, and I am sorry that we haven't made more progress. I believe that the deficit needs to be brought down, especially now that we're in an environment of higher interest rates. And for example, over the last year, the interest cost of the debt has increased by several $100 billion. It's one of the largest items responsible for the increase in the budget deficit. And we do need to bring it down. The primary deficit, excluding interest, is now a little over 3%, and I believe it needs to come down.
Let's unravel this story piece by piece, because it's about more than just regulatory buzzwords or a passing comment. It's about how XRP, uniquely suited for institutional use, could bridge the gap between crypto innovation and the existing financial system. To understand the full scope, we'll dive into Janet Yellen's recent statements, the evolution of crypto regulation, the ongoing battle between Ripple Labs and the SEC, and the larger implications for XRP investors and the global economy.
U.S. Treasury Secretary Janet Yellen says the U.S. will reach the debt limit sometime after January 14th. In a letter sent to Congress yesterday, she says the Treasury will have to take extraordinary measures to pay Washington's bills on time and in full. Once that happens, that will make addressing the debt limit a top priority for the early days of the Trump administration and the 119th Congress.
It started subtly. A congressional hearing many dismissed as just another routine discussion on digital assets. Treasury Secretary Janet Yellen, known for her cautious yet pragmatic approach, addressed the growing importance of regulating the crypto industry. While her statements might seem conservative on the surface, they hint at a more profound realization. Digital assets are no longer a fringe innovation. They're becoming integral to the global financial fabric.
75% roughly of the investment, the private investment that's been stimulated by the Inflation Reduction Act, is going to counties with below median income and education. And so we're creating good jobs, especially for individuals who don't have or want to have a college education. And we're also making our economy more resilient by reducing our dependence on global markets.
Yellen emphasized that stablecoins, digital assets pegged to traditional currencies, present both opportunities and risks. She urged Congress to establish a federal regulatory framework, a critical move to ensure financial stability while preventing misuse of these technologies. But her tone wasn't purely cautionary. Hidden within her words was an acknowledgement of crypto's potential to enhance efficiency in payments and remittances, areas where XRP excels.
I have a little bit of skepticism because there are, I think, valid concerns around it. Some have to do with financial stability, consumer investor protection, use for illicit transactions and other things.
Right.
On the other hand, there are benefits from crypto, and we recognize that innovation in the payment system can be a healthy thing. We would like to come out eventually with recommendations that will create a regulatory environment in which healthy innovation can.
Let's unpack that. Stablecoins and regulated cryptocurrencies are increasingly being viewed as the future of cross-border payments. Traditional systems like SWIFT, while reliable, are slow, costly, and cumbersome compared to blockchain-based solutions. XRP, with its lightning-fast transaction speeds and near-zero fees, addresses these inefficiencies directly.
So RippleNet is trying to take on SWIFT. What's been the traction like? Who's come on board?
Well, it's interesting as you step back and look at this. If you and I decided we were going to send $10,000 to California today, the fastest way for us to do it would be to drive to the airport and fly it there. That's a crazy thing to think about when you're in the age of the internet and we're used to information on demand. When we think about the customers that have come on board, it's because we're solving that real problem. We're changing the nature of a payment taking days to settle to California to seconds. So we now have well over 100 customers ranging from some of the biggest banks in the world to payment providers to the Western Unions and MoneyGrams, Linlan Pay out of China.
How many banks?
It's over 100. I actually don't know the exact number now. Last time we announced it publicly, we said over 100. We'll probably announce the next one when we get to over 200. We're signing up more than a bank a week now.
Unlike Bitcoin, which was designed as a decentralized alternative to fiat currency, XRP was purpose-built to work within the financial system. Ripple Labs, the company behind XRP, has spent years fostering partnerships with banks and financial institutions worldwide. XRP's technology enables real-time cross-border payments, a feature that directly aligns with the U.S. Treasury's goals of modernizing payment systems and maintaining the dollar's global dominance.
So from the earliest days, Ripple has been focused on solving the problem around cross-border payments. It's slow, it's expensive, and we use a digital asset called XRP to help speed that up, make it very inexpensive and very reliable. But the challenge, as you know well, is the U.S. has had this very hostile. The Biden administration has been waging a war on crypto, and I think an unlawful war. Courts have agreed with us on that. And we're finally seeing that kind of unlocked in a Trump embraced crypto, and crypto embraced Trump. And I think we're seeing that reflect in kind of how the markets have reacted since the election.
So
here's the kicker. XRP isn't just theoretical. It's already in use by major institutions for settling international transactions. Ripple's on-demand liquidity platform leverages XRP to eliminate the need for pre-funded accounts, reducing capital requirements for banks. This efficiency isn't just a selling point. It's a game changer for the financial sector.
At its core, Ripple has been all about enabling what we call an internet of value. Let's make all of these different networks that really don't talk to each other interoperable. We've all had the experience where, when you ask a friend, you say, hey, I need to pay you money. Are you on Venmo? Are you on PayPal? Or outside the United States, maybe Alipay or PayU. Isn't it funny? When I ask somebody for a phone number, I don't say, are you on AT&T? Are you on Verizon? I just get their phone number. The idea behind PayID is to simplify the ability to send someone money the same way, to make it easy as sending an email. I don't ask someone, are you on Google or Yahoo? I just send an email. And so PayID enables, whether you're a large bank or I'll use a very successful regional bank in Chicago called Byline Bank. If you're an account holder there and I want to send you money, it should be as easy as typing Brad $Garlinghouse. And whether it's resolving to a Byline Bank or to Bitcoin, all of this naming infrastructure can be much simplified and interoperable.
So why hasn't XRP been universally adopted yet? The answer lies in the ongoing legal battle between Ripple Labs and the SEC. Since December 2020, the SEC has argued that XRP should be classified as a security, a designation that would subject it to stricter regulations. Ripple, however, insists that XRP is a digital asset, not a security. The outcome of this case could set a precedent for the entire crypto industry. Janet Yellen's recent statements align with broader moves within the U.S. government to establish clearer crypto regulations. In particular, she has called for a federal regulatory floor for stablecoins and digital assets. This would create a consistent set of rules across states, preventing a fragmented regulatory landscape.
And then let me start with, Secretary, the cryptocurrency, because I do believe, and I want to be a part of this discussion, we do need a regulatory framework for stablecoins. Last week, Fabio Panetta, one of the European Central Bank's 6 executive board members, noted that the cryptocurrency market is now larger than the subprime mortgage market, which triggered the global financial crisis. Nobody knows that better than us in the state of Nevada. And he says this, $1.3 trillion market shows strikingly similar dynamics. There are about 10,000 crypto assets now. So my question, Madam Secretary, is one financial risk posed by cryptocurrencies is the concentration of ownership. Do you see any financial risk because professional investors and high net worth individuals hold almost 2/3 of the Bitcoin supply?
So I'm not sure if the concentration of holdings among high wealth investors, if that's true, poses in and of itself a financial risk unless those investors happen to be leveraged so that a decline in the value of the assets can trigger financial distress, which spills over to others. But certainly I think there are many risks associated with cryptocurrencies, and the president has asked the Treasury and FSOC to look at those risks. We will issue a comprehensive report shortly. The president's working group has already described the risks we see in connection with one form of crypto assets, which is stable coins. And there we see run risks, which could threaten financial stability, risks associated with the payment system and its integrity, and risks associated with increased concentration if stable coins are issued by firms that already have substantial market power. So we definitely see significant risks here.
But why is this significant for XRP? Unlike Bitcoin or Ethereum, XRP's design makes it highly adaptable to institutional requirements. It can function seamlessly within regulatory frameworks, making it an attractive option for integration into the U.S. financial system. Yellen's push for regulation isn't just about mitigating risks. It's about creating a foundation for digital assets to thrive in a controlled environment. Yellen also highlighted the importance of international collaboration in regulating cryptocurrencies. Cross-border cooperation is essential to prevent regulatory arbitrage, where companies exploit loopholes in jurisdictions with lax rules. This aligns perfectly with Ripple's global strategy. The company has already established partnerships with financial institutions in Asia, Europe, and the Middle East, proving that XRP can operate within diverse regulatory environments.
You're exactly right. You know, the United States SEC filed a lawsuit about what is XRP 4 years ago. And so it kind of froze the U.S. market opportunity for us. You know, if you're a U.S. bank or U.S. financial institution, you're like, let's just wait and see how this plays out. So 95% of our customers are outside the United States. And finally, I think we're at a point where we can actually see growth and see the crypto industry thrive here in the United States. The largest economy in the world has really been leaning out of the crypto economy.
And giving it up to China.
There's no question. Like, it's growing in the UK, it's growing in Japan, it's growing in Switzerland. I mean, these are big economies that are leaning, the US really has been the outlier in many ways.
To understand why XRP could play a pivotal role in the U.S. financial system, we need to zoom out. The U.S. dollar has long been the world's reserve currency, but its dominance is being challenged. Countries like China are developing their own digital currencies, while private companies are launching stablecoins that could rival traditional fiat currencies. For the U.S. to maintain its economic influence, it needs to embrace digital innovation. XRP offers a unique advantage. It's a bridge currency that can facilitate transactions between different fiat currencies, digital assets, and even central bank digital currencies. By integrating XRP into the financial system, the U.S. could strengthen the dollar's position as the global standard for trade and commerce.
Crypto has been in the news time and time again, and I just want to share that I am on the board of Ripple. Ripple is XRP. And so when people ask me the question, why did you join the board of Ripple? I joined the board of Ripple because XRP serves a purpose. It's a function that facilitates cross-border payments. It's not some store of value, kind of arbitrary value that is not pegged to anything. This is actually what legitimate financial institutions use specifically for cross-border payments. So instead of days and dollars, it's seconds and cents. And that is the future, in my opinion.
While the legal battle over XRP rages on, Wall Street isn't waiting on the sidelines. Financial institutions are already exploring ways to integrate blockchain technology into their operations. The approval of Bitcoin ETFs marked a significant milestone, signaling that traditional finance is warming up to crypto. But Bitcoin, with its energy-intensive mining process and slow transaction speeds, isn't ideal for institutional use. XRP, on the other hand, offers the scalability, efficiency, and compliance potential that institutions crave. It's no coincidence that Ripple has been quietly building relationships with banks, payment providers, and regulatory bodies. The company's strategy is clear. Position XRP as the go-to solution for real-time payments in a regulated environment.
Right now, it's hard to transfer ownership of real-world items over the web. Sure, you might, say, buy a car through an online marketplace, but the title that proves you own it will come as a piece of paper in the mail a few weeks later. In the hopes of bringing ownership online, developers are creating tokens that represent real-world items.
The great thing is we can do this with almost any kind of an asset. It could be a traditional stock or bond. It could represent ownership of a building. It could represent ownership of a car. It can represent ownership of virtual property in some game land.
Once you have these assets that are tokenized, there's so many different use cases for them. You can put derivatives on them. Obviously, you can open it up to the masses, whether you're tokenizing something as simple as maybe real estate, to other use cases out there, even securities as well.
The banks backing this technology think it could expedite trading across Wall Street and maybe create new investments altogether. That's why they're putting their money behind it. For example, JP Morgan has Onyx, a blockchain platform it launched in 2020. In the short time since then, it's handled $700 billion in short-term loans through its private blockchain. JP Morgan says it's a killer app for the future of finance.
So we have a platform called Onyx Digital Assets, which is, you can almost think of it as a general purpose tokenization platform with money that's provided through our money solution, which is called JPM Coin. And now, because you can tokenize the security and you have the money on the same infrastructure, you can potentially do a transaction for 15 minutes or 20 minutes or 2 hours.
And Larry Fink, the CEO of investment giant BlackRock, called digital assets innovation in tokenization the next generation for markets.
The outcome of the Ripple SEC case could have far-reaching implications. If Ripple prevails, it would not only clear XRP of the security label, but also establish a precedent that could pave the way for broader crypto adoption. This would validate XRP's utility and open the doors for institutional investment. Janet Yellen's comments suggest that the U.S. government is preparing for a post-litigation world where XRP and other compliant digital assets can thrive. By creating a regulatory framework, the Treasury is laying the groundwork for cryptocurrencies to integrate into the financial system without compromising stability. For XRP investors, the stakes couldn't be higher. If XRP is integrated into the U.S. financial system, its value could skyrocket. Adoption by banks and financial institutions would drive demand, while regulatory clarity would reduce uncertainty. But the road ahead is far from smooth. The Ripple SEC case remains unresolved, and broader regulatory challenges loom.
We're seeing a pretty good progress despite a slow-moving judicial process in the federal courts. Clearly we're seeing good questions asked by the judge, and I think the judge realizes this is not just about Ripple. This will have broader implications, and I think that's a very good thing. I'm hopeful that certainly in 2022 there'll be closure here. But look, I think seeing countries like the UAE provide leadership, I mentioned Japan and Singapore and Switzerland. Ultimately, we need those things on a global basis. And if you look at the macro trend line for crypto regulation globally, you're seeing it's moving very much in a positive direction. That's not to say there are countries like, say, China or India that have at times stepped back and had concerns. But in general, the direction of travel is very positive.
Yet, the signs are promising. Yellen's comments, the Treasury's push for regulation, and Ripple's global partnerships all point to a future where XRP plays a central role in the financial system. For those willing to navigate the uncertainty, the potential rewards are immense. As we stand on the brink of a new era in finance, one question lingers. Is XRP truly ready to become the backbone of the U.S. financial system? Janet Yellen's cautious optimism, Ripple's strategic positioning, and the evolving regulatory landscape suggest that the answer might just be yes. But there's more to the story. While Janet Yellen's comments on crypto regulation are already sending ripples through the financial world, the broader implications for XRP and the entire crypto market are unfolding in real time. As the SEC's battle with Ripple rages on, new developments in other crypto-related cases, like SEC versus Coinbase, could reshape the regulatory landscape.
The US SEC is suing Coinbase, accusing the crypto platform of not following broker registration rules to trade crypto products that the regulator alleges are securities. Coinbase CEO Brian Armstrong accused the SEC of regulating by enforcement, an approach he says is harming the US.
This isn't just a game of legal chess, it's a high-stakes struggle for control over the future of digital assets. And XRP, with its unique positioning, might just emerge as a linchpin of this transformation. But to understand why, we need to examine not only the legal battles, but also the market dynamics driving XRP's resurgence. Let's start with the SEC's ongoing case against Coinbase, which could hold significant consequences for XRP. Coinbase, one of the largest cryptocurrency exchanges in the world, filed a motion to dismiss, arguing that the SEC lacks the authority to regulate crypto exchanges under existing laws. Now here's where things get interesting. Ripple's chief legal officer, Stuart Alderoty, weighed in on this issue, pointing out the apparent contradiction between Janet Yellen's testimony and the SEC's stance. While the SEC argues there are no gaps in crypto regulation, Yellen's call for comprehensive legislation suggests otherwise. Think about it. If the SEC is wrong and crypto-specific laws are needed, as Yellen suggests, it could undermine the foundation of the SEC's arguments, not just in the Coinbase case, but also in the Ripple case. And that's a potential game changer for XRP.
We think this is the beginning of the end of the case in terms of how the case is going to unfold. Just to level set really briefly, what this case is about is whether or not an offer or sale of a digital asset is a special type of security known as an investment contract. There are no allegations of fraud in this case. There are no allegations of misrepresentation. There are no allegations of market manipulation. It really is a technical issue, and whether or not the offer and sale of a digital asset needs to be registered as a security. So we believe that unless there is a contract for an investment, there's no case, and actually there's no authority for the SEC to even weigh in. But if you get to the Howey case, and I think most of your viewers know what that is, we believe that they don't satisfy any of the prongs of the Howey case.
Amid these legal battles, XRP has been holding its ground in the market. Recently, XRP saw a modest gain of 1.68%, closing at $0.5136. This uptick might seem small, but it's significant given the bearish trends dominating the crypto market recently. So what's driving this resilience? Investors are closely watching developments in the SEC v. Ripple and Coinbase cases, as well as updates from lawmakers pushing for regulatory clarity. Senators Cynthia Lummis and Kirsten Gillibrand, for instance, are championing the Responsible Financial Innovation Act, which could give the Commodity Futures Trading Commission more oversight of digital assets. If this bill passes, it could shift the regulatory focus away from the SEC and toward a framework more favorable to crypto innovation. And guess what? That would be a massive tailwind for XRP. Let's zoom in on XRP's price action. While the daily chart shows XRP trading below both its 50-day and 200-day exponential moving averages, signaling bearish longer-term trends, the 4-hourly chart offers a glimmer of hope. XRP remains above the 50-day EMA, suggesting short-term bullish momentum.
And they put together a comprehensive piece of legislation. So here's the summary of it. It's about 6 pages, the summary, and the whole bill is quite large. The copies that we got were over 140 pages, and when we saw them actually just a few weeks ago when we were in DC, it was still growing and still changing. But it covers all kinds of things. So Title I covers definitions, Title II, responsible tax for digital assets, different sections, de minimis exclusions, broker clarifications, trading safe harbor for non-U.S. persons, this applies to autonomous organizations, digital asset lending agreements, IRS guidance, RIA guidance. You have digital asset mining and staking guidance. Then there's conforming amendments. Then there's stuff on the security side, and it creates a lot of legal classifications. And what they do is they basically kind of talk about the Howey test, and they talk about its relationship to commodities. And basically what they do is they create a situation where things that are obviously a commodity ought to be a commodity, and things that are behaving like securities should be securities.
Here's the key takeaway. If XRP can break above the 52 cents handle, it could rally toward the $0.547 resistance level and beyond. However, failure to hold above $0.5042 might lead to a dip toward the 49 cents handle. The 14-day Relative Strength Index, RSI, currently at 41.92, indicates that XRP isn't oversold yet, leaving room for further declines before a potential rebound. On the 4-hourly chart, the RSI reading of 58.43 suggests that XRP might push higher before entering overbought territory. While price movements are important for traders, the real story lies in XRP's potential role in the evolving financial system. Ripple's on-demand liquidity, ODL, platform continues to gain traction, offering real-time cross-border payment solutions. This utility sets XRP apart from speculative assets, aligning it with Janet Yellen's vision for a more efficient and secure financial system. For XRP investors, this isn't just about short-term price movements. It's about being part of a transformative moment in financial history. Whether XRP becomes a cornerstone of the U.S. financial system or faces new hurdles, one thing is clear: the world is watching. As the legal dust settles and regulatory frameworks take shape, one question remains: will XRP emerge as the bridge between the old world of finance and the new? Stay tuned, because the answer could redefine everything we know about money, technology, and power.